Do you want to talk about other, like, because we had a couple questions here actually. Both Marty and Haley asked similar questions. Haley says, "Hey Brandon, I have a question for Ryan. What impact will this COVID-19 pandemic have on the housing market? Will late summer be a good time to buy?" And then Marty also similarly asks, "Wondering about the real estate market, which has been hot, with the government telling people basically not to pay their rent. I see a crash coming." So these are kind of maybe two different angles on the same topic of real estate.
So, seeing a crash coming, maybe not. This is again getting into the kind of crystal ball territory. Now, Marty, let's say that you are right, and we go back and watch this conversation, say 2 years from now. Marty told us, of course, it was obvious. Why did we make a decision then?
Marty, you're welcome for publicizing your
right.
comment, making you look like a genius.
But Marty might not be right either. So yes, there's so kind of two different questions there. One I think was more around housing and the residential real estate market, and the other was more about commercial market with businesses. Some businesses not being able to pay their landlords, things like that.
That's right. Yeah.
Taking the first one, the residential market, housing. In the Twin Cities, we've been very short on supply for a long time. It's really been a seller's market for quite a while. That'll probably soften up a little bit. If people's incomes are down, a lot of people are losing their jobs. Those kind of pressures tend to, affect buyers. So, but there's a lot of cushion there in the Twin Cities housing market because it has been so red hot. So, I don't know if housing prices are going to fall off, say the way they did in 2009, because that was really, they fell off for a different reason.
That crisis was about housing.
Correct. So, will prices soften? Maybe. I think it's a safer assumption to think maybe the increases that we have been seeing, price increases in housing, will level off. If you wait to say I'm going to wait to buy a house after prices fall 10%, you could be waiting and it never happens. Housing is one of those things where it's usually primarily a lifestyle choice. I need a house to live in. Maybe I need a bigger house because I have a growing family. I want to be in a certain school district. It's really a lifestyle choice and a financial choice second. You still want to make sure that all the finances are in order. But and then as far as commercial real estate, businesses paying rent to their landlords, or whether it's
that market I could see going down.
Warehouse space or industrials. I mean that all follows the economy much more closely, whether it's jobs or manufacturing, things like that. What's interesting, and having spoken with a couple of landlords, and there's been local newspaper articles about this, the recent bailout bill, if you want to call it that, financial stimulus. There's we're all waiting on getting these checks from Uncle Sam. So that's for individuals. There's a paycheck protection loan program for small businesses to be able to continue paying their paying wages. But there's nothing in there necessarily for landlords, people who own commercial real estate. So there's been several companies, say take restaurants and bars, who've had very little revenue. They can't pay their rent. What's the landlord to do? Some of them are able to weather that storm because maybe they don't have a huge mortgage on the building. Maybe they have enough cash set aside. But for the most part, real estate is backed by loans. So even if the landlord's not getting their rent, they still owe the mortgage company, the bank, the mortgage payment. So I don't know how that's going to get figured out, but
that's hairy. I mean, that could be bad.
it could be bad, and it's such a huge part of the economy. I don't know that it will be allowed to get out of hand. Meaning, there's already talk about a second stimulus round. They're talking about spending on infrastructure for one. If things get too bad in the commercial real estate market, again, crystal ball, but.
Well, I know of, I mean, it's not that significant, but I know a massage studio that closed in Southdale Mall in southern suburbs. And I expect that's going to happen a lot. Not just because malls are closed, but I mean, and not just in malls, but people aren't going out for that at all, and salons and
Right.
Bars and restaurants, you name it. You think maybe there's an idea out there that businesses have a lot of money and maybe they have a lot to save, but would you say that businesses are a lot like people where they're one paycheck away from?
I think that's a lot of businesses.
Yeah. So they're kind of paycheck to paycheck in their own way, like month to month, you would say.
Right.
So if they don't get revenue for a month.
And there's a fair amount of businesses who have, say, lines of credit with a bank.
Okay.
Where the lines of credit are and the credit's based off of the income potential of that business. So they might borrow next month's income to pay wages today, and that's just how they operate. Good, bad, or otherwise. You can argue about that, but this kind of idea that whether it's the landlord, the person who owns the building, or the businesses are always these wealthy individuals that can weather any storm. I think that's a bit misleading.
They're not all a monopoly guy.
No. So part of the stimulus bill was there's a moratorium on foreclosures and evictions for 12 months.
12 months. See, I'm interested in that. See how that might play out, because if you don't pay your rent, they're not saying you don't have to pay your rent. They're saying they're not going to kick you out. So you still have to pay it if you want to stay there. But then people are going to, if they can't afford their rent today for $800, they're not going to be able to afford their rent in 2 months for $2,400.
Right.
So I just see a lot of money not getting paid here.
And meanwhile, the owner of the real estate building, let's just take an example. Say you live in a fourplex in South Minneapolis. Those you owe $1,000 a month in rent. A lot of those kind of buildings are owned by individual investors who that's part of their portfolio. That's part of their retirement, and those aren't necessarily the people who have millions of dollars of cash in the bank that can just say, "Oh, don't worry about your rent. I have enough cash." Just consider it charity. So there is going to be some effect there, but I don't want us to prognosticate too much, because it's in times like these when it seems the scariest is oftentimes when it's at its worst. So I don't know if it's going to get better tomorrow or next week or when it is, but to assume that as bad as things are today is how it's going to be for the foreseeable future, and extrapolate all the damage that's going to cause.
Right. It's the delusion of permanence.
There you go.
And people, it's the same mistake the opposite way.
Correct.
So because
things are always going to go up.
The Dow's at 30,000.
Yeah.
Oh my gosh, that's poor. Let's smoke those cigars.
Yeah.
Yeah. Right. Well, gosh, I'm just thinking now of a friend who has a few homes, and she rents them out, and I'm gonna call her after this. I'm gonna reach out to her. I'm curious. I hope she's okay, because if she can't collect money, but she can't get new renters.
Right. And probably has a mortgage.
Yeah.
Against the property.
Yeah.
Still has to pay the bank.
Yeah, the banks aren't gonna say.
There's part of the relief bill that has allowed for, I think the term is forbearance on mortgage payments.
Okay.
That allows the mortgagee, and I think it only applies to your primary residence.
Yeah.
But don't quote me on that. But you
Yeah.
can go to the bank and say, hey, I want to stop my mortgage payments for, say, 2 to 3 months.
Yeah.
But it's still on the bank to essentially allow that to happen, and it's on the bank to say, well, after those 3 months, you owe then 4 months worth of payments, or maybe we'll tack it on to the end of the loan.
Yeah.
And now mortgage rates are as low as they've ever been. So for someone now,
Haven't they been saying that our whole lives? Not
Yeah,
our whole lives, but our whole adult lives.
and they've really ratcheted it down too. So
Is it just because of a combination of new crises? Like, because they were super low in 2000, like 2003, 4, 5, right? That's when I worked for a mortgage company.
Okay.
And everyone was refinancing.
Yeah.
2004, 2005, right?
Right.
Right around there. I think 2003, 4 is when I worked there. Anyway, it was a college job. And so it's like, oh, record low rates, and da. And I just kept hearing that.
Mhm.
Now I've been hearing that since then. Maybe the housing crisis had something to do with that. Did they drop on account of that, or did they go up? And now they're low again. I don't know. It just seems like they're always lower. And how can you get lower than the lowest?
I was told by my dad that the house that I was first lived in when I was born in 1980, and I think they bought that house with a mortgage in the mid to high teens, like 18% or something in a mortgage.
That's crazy.
So we're old. We're not that old. It was 40 years ago.
We
So
talk about things never being the same, but in our lives,
yeah.
or our adult lives, we've never known an adult life with interest rates like that.
Right.
Not
And
even
so,
close.
if you can get a 30-year fixed mortgage on a house that you plan on living in for some time, and it's in the low to mid 3%, are they going to go lower than that? Maybe. There's not a...
How much lower can they go?
Correct. And then, if at some point they get back into the 5s, which is still historically not a bad rate, you'd rather have it locked in at, say, 3.5. So there's been a lot of refinances again lately, so much that it's really overwhelmed kind of the market and all of the processors.
And now that this monkey wrench is thrown in, who knows what that's going to do, right? The fact that people aren't going to be moving as much, and some are going to, there's just not going to be as much activity. One, people are staying in their homes because of this, like literally staying in their homes, and two, because there's going to be a lot of people who can't afford their home, but they're not going to be foreclosed on either, so there's not going to be any movement there either. I would think it'd be a buyer's market, but people, if you have a house for sale and no one's buying, you're going to drop the price, right?
And I'm just talking local market here, but I know there's been several real estate transactions that I've been close to that have happened recently because there's still buyers out there with healthy financials and low mortgage rates. So is that going to soften up? Probably, but I don't know if it's going to turn into a total freeze of the local housing market.